Sorry I'm late. I completely lost track of time. I wish I could blame it on technical issues, which it usually is, but not tonight. I was watching YouTube videos. All right. Why am I only showing 720p? That should not be. Why? 720p. That's disgusting. It's like 1990s type of technology. All right. Then I'll let me change it. Okay. Let's get to it. Let's say hello to folks. Welcome to Sunday Night Futures Live. I am looking forward to this trading week because it is going to be an interesting one. We have the futures that are open. We're going to go over the futures action. We'll let things settle down here for a moment. We're going to go over natural gas. I titled this video, Why Natural Gas Could Be the New Gold, 5 reasons. We're going to go over them in a moment. And for disclosure purposes, we are now long of natural gas as of Friday. I intend on adding more to the trade. So very, very bullish on natural gas. We'll be going over those reasons in a moment. Before we get into it, I wanted to do this on Thursday night. One of our members, I want to give a shout out to Sean, one of our dear, cherished members. Sean sent me over a 5-pound bag. He knows I'm a coffee junkie. A 5-pound bag. I haven't opened this yet. I could smell the coffee through it. That's how good it is. A 5-pound bag of Peruvian, really nice blend here. Peruvian coffee smells awesome. I'm looking forward to opening up. Thank you, Sean. Thank you very, very much. Much appreciated. It will not go to waste. So let's get to it. Let's go to comments. Say hello to folks. And we put my spectacles on. Franklin, welcome. Sean, thank you, sir. And thank you for the coffee again. Mr. Talon, welcome. William, welcome. Mr. Pete, welcome. Sam, hello. Is this Sam from Italy? Denny, hey, brother. Okay, I have everybody's chart requests. I'll do a refresh to make sure I didn't miss any because I have a tendency to do that. Talon, I have yours. Donnie, I have yours. Sean, I have yours. And if I missed your name, I'll do a refresh and we will get to your chart requests. I'm sure you could. You're a big boy. I'm sure you can take it. All right. Thank you again, Sean. Appreciate it. All right. So let's start off with the equity futures action. ES, NASDAQ, S&P 500 opened up, now down fractionally. I'm not seeing a lot of volume here, not a lot of action whatsoever. But what we do want to do is, let's get our crayon out and identify where, I didn't want to do that, where things might get interesting. And where they might get interesting is if we break this support level here, which would be a break of 15-minute trend. And it would also be interesting if we break out to new 15-minute higher highs. But again, there's no volume here. Thin volume, they can manipulate it all they want. Let's check in with NQ. NQ down spot 1.2%. We still remain short of the NASDAQ 100. We have not changed that position. I haven't added to it. I don't see a reason to yet, but we have plenty of capital on the sidelines getting ready to really ramp up to the short side. But right now, I don't have the reason to quite yet. Now, the NQ is at 20,000. It's really holding on to that support level. Again, what we want to do here is get our crayon out. We tap support. The question is now, do we break below lower lows? And vice versa, do we break out to new higher highs? Now, looking at the Russell 2000, this tells me that yields, I haven't even looked yet, yields are probably moving lower. Russell 2000 up nearly 1/4 percentage point at the highs of the session. Bullish key reversal bar. They traded it down. It's now up. Not a lot of volume. YM, Dow Jones Industrial Average, down 0.07%. Looks like we have a bit of a triangle formation going on here. So again, do we break support? There's nothing for us to do here except for watch at this point in time. There's no setup. What else do we have? Let's check in with volatility. Is this right? No. What is this, a new contract? Could be a new contract. Showing the VIX is up 60%. It's a new contract. That's why. New contract. All right, so let's ignore this new contract, very noisy. Let's look at the 10-year yield. Yields are actually moving up, and the small caps are moving up. But again, new contract here. So this is a bit noisy. This is the it's saying September contract, but that doesn't make sense. Maybe it is. I don't trade yield futures, so I'm not familiar with them at all. So I would ignore VIX. I would ignore yields right now. We could take a look at the CNBC tool to identify in real terms what I'm about to sneeze. What yields are doing. I'm fighting off a sneeze. Dollar trading down at current. Relative, actually, it's actually up. It's actually up relative to Friday's close. It's off of the post trade highs. So technically, it's still up relative to the close on Friday. Now, looking at the Japanese yen and euro, let's go euro first. Euro had a very strong week last week. Not so much the Japanese yen. This is last week here. This is this week. So euro looking very good, flirting with new weekly higher highs. As for the Japanese yen trading up, holding this 5-period moving average in white. All right, so we covered currencies. Let's take a look at, I got to take a look at natural gas because now we're positioned here. Natural gas is opened up at about a little over 1%. Let's go to the 15-minute chart. We were higher with a little bit of a reversal bar on natural gas. Folks, the thing to remember here is that natural gas closed out the day kind of overbought on Friday. And I was asked the question, would I buy it near the close on Friday? My answer is no, because I think that we're probably going to get a pullback and a higher low. So, we're up at current. It's great for our position, Boyle, which we have a call spread contract in. But I would rather see a pullback, a stair step higher. We'll add more to that position in the coming days. Again, stick around. I have 5 reasons as to why I'm very, very bullish on natural gas. So natural gas up, yet coming in off the highs of the session. Sticking with the commodity story here, let's talk oil. This is light sweet crude. Light sweet crude is up at current, but off the highs of the session. Looks like we have a new contract that opened up here. So we are in a wedge formation. It's anyone's guess which way oil goes here. Let's set up an alert. Let's take a quick peek at, let's go precious metals. Let's go to gold first. Gold trading down at current. Really great week last week for gold. All-time highs. I'm still bullish on gold longer term. We have plenty of gold. We have plenty of gold mining stocks, silver mining stocks. So while I titled this video, why natural gas could be the new gold, I'm still very, very bullish on gold. We're just looking to diversify. Let's take a look at silver. Silver down at current, down 0.11%. Attempted a breakout at the open here, was rejected. Let's set up an alert here. Let's see if we get some follow through. That could be a buy signal for silver if you're day trading it. I'm not a big day trader, but for those out there interested, we'll keep an eye on it. I want to go back to natural gas in a moment, but first let's take a look at palladium. I have a position in this. It treated us well last week, but we're down at current by just about 1%. Let's go back to natural gas. All right, so we have our second 15-minute bar, which is opened up here. I want to know if we take out the highs of the session. That's all I wanted to do. I'm sorry. I apologize. So I saw your note there. I'm a lady. So I used to do a morning show at about 5 o'clock in the morning. I did it for about a year and a half, 2 years. And obviously a lot of Europeans were watching. And this one guy, Sam, this is during COVID, as a matter of fact. Italy was getting hit hard. He was always on every single morning. Really, really nice guy. So every time I see the name Sam, I think of Sam from Italy. And you're from Boston. I was just up in Salem. I had a great time up there. I'm sure you are a lady. I'm confident in that. So welcome. Lack of rainfall. Larry, lack of rainfall in Brazil is hurting soybean crops. Amazon River is at its record lows. Price of soybeans, coffee, sugar will be affected. Well, coffee we know is at record highs. Let's check in with soybeans because I want to go to agriculture anyway. Seasonality favoring soybeans right now. How did they close out the week last week? I think it was wheat that pulled back on the week. Soybeans looking good here. It looks like they want to launch. In fact, they broke out last week. Bullish on soybeans. Let's take a look at wheat. Yeah, wheat did not have a good week last week. They tried to break it out. Actually, I shouldn't say they tried. They did break it out the week before last using this 21-period EMA as our breakout point. But it couldn't hold it last week. We'll see what this week brings. At current, we're up 0.18%. Let's check in with corn. Corn, same setup as with wheat. So this may be a buying opportunity for these names, in particular corn. I like soybeans very much as well. Seasonality, we went over this about 3 weeks ago. We went over the ag names because they were in a big bear market. Why? Seasonality. and seasonality is now favoring this name. So it's a good time to pick up a position here if the setup's right. Did I miss anything? I haven't any alerts fire off. That tells me that we have not much volume. Oh, live cattle. Man, this thing broke back out again. I think they're pricing in a Camilla presidency here. Because if it was a Trump presidency, live cattle would be dropping like a rock. Let's home heating oil. Time to fill up the tank. Looks like we're getting ready to move up higher on home heating oil. All right, let's get to the week ahead. All right, before we get into the week ahead, folks, if you're not part of our trading community, it's free. Great people inside that community. You have Bull Bear Banter, the chat room. You have the live feed. I post a lot of stuff there. In particular, we have where you post your requests for Sunday Night Futures Live. This is free for now. At some point in time, once we have organic growth, we're going to be charging for this. So it's free for now. It always will be free if you sign up now. So join, participate, engage, and let me do a refresh here, make sure I didn't miss anybody's request. All right, good. I didn't. Also, I posted on YouTube and in the feed my top 5 stocks for the new trading week. LABU, Amazon, Cisco, Amgen, and Verizon going into the new trading week. The common theme among these names is that all of them are breaking out a very sound basis. So your stop loss point is clear. It's defined. In terms of Verizon, you have a big fat yield, and we're going to be seeing lower interest rates. What will companies, or not just companies, what will institutions and retail investors be chasing? Yield. So names like Verizon, which I believe is yielding 6%, is not only is it yielding 6%, you have upside potential on the share price. It's breaking out. Very, very bullish. Again, check out, I'll post the link in the forum. I guess I can't. Well, here's a link here. Here's the link. Check it out at your leisure. It's also posted in the forum. And here's the link to the forum. There's a link below, but I'll give it to you in the feed. Something just fired off. We're going to go back to the futures for a moment, see what's going on. There's a link to the feed as well in the forum if you want to join up. And let's see what happened here. Oil looks like it broke lower lows. I'm just interested in volume. Not a lot of volume here. Okay. All right, let's talk about the upcoming week. This week, we have a lot of Fed heads coming out this week, folks. So what they're going to be doing is they're going to be massaging expectations of traders. That's what their job is. Bostic comes out tomorrow. Goolsby comes out. He's a dove and a half. Neil Kashkari is kind of crazy, so you never know what he's going to say. We get S&P U.S. Services PMI. On Tuesday, more Fed heads. We get consumer confidence. We're going to be talking about that more in a moment. Wednesday, more Fed heads coming out here. New home sales, not a big mover for the markets. Thursday, they won't shut up. You have Jay Powell, all these Fed heads coming out on Thursday. Initial jobless claims, watch that. That's been important of late. Durable goods, very important number. That's a measure of the purchasing of washing machines, dryers, durable goods, big ticket items that last several years. They're expecting a negative read. We get the GDP second revision. Friday, inflation data. I'm not going to read all that much into this. Why? Energy has been down. Agriculture's been down. Now, they did do a bounce back last week, but we're not going to see that reflected in the inflation data until next month. So this week, you need to worry about housing. That's a problem. That's something that is a major problem. And the reason why it's a major problem, you have an influx. I mean, the immigrants, the illegal immigrants coming into this country now, they are jacking up housing prices all over the place. Why? They're on welfare. They've been given thousands and thousands of dollars in food stamps, or EBT now they call it. They've been given a stipend to be able to afford housing. And ordinary people, they have to compete with them now. What does that do with the legal U.S. citizen? It's inflation. It's inflation. So I'm not going to get started on this tirade, but there are, I believe, intended consequences here. It's to bring down the lifestyle of the U.S. consumer and to stick our nose in the mud, to humble us. And do not get humbled. Do not get humbled. Push back on these bastards. Watch out for personal income. The Federal Reserve does not want to see people making more money. Last thing they want to see, with all the illegal immigrants coming in here, this should not be a big problem. Consumer sentiment, the final revision, that's for September. Let's go to valuations of the equity markets. We're just below the highs of 2020. The highs back in, I need to stand corrected, 2021. That was at 38.58. We are at current 36.63. And we could quite very well be moving up higher here. Buffett indicator, strongly overvalued. We are currently trading above the 2 standard deviation move. We were there right around COVID, and we all know what happened back then. Boom. Humility. Lastly, before that was a dot-com bubble. Now, looking at the FedWatch tool, there's something very, very wrong out there. This number here, forget about the probability of an ease. We're getting cuts. They're coming. Focus on the size of the cut. After we got, what was the report that came out? I think it was on Thursday. What was that report? Last week's Thursday. Yeah, the Philly Fed survey came out, and U.S. leading economic indicators came out, and they were less worse. In fact, the Philly Fed manufacturing survey, they expected a negative number. They got a positive number. So the expectations for a rate cut of a quarter basis point jumped up to like 80%. Then by the end of business on Friday, we were down in, I don't know, 55, around there. Now the probability of a 50 basis point cut is the likelihood, not a possibility, but the probability. It's being expected. The question is, what's wrong? What is wrong? Why do we need these rate cuts? I thought GDP, according to the Federal Reserve of Atlanta, was growing at 2.8% for Q3. What is wrong? Watch out for these revisions that they're going to be reporting this week. Okay, yield curve. I was asked about the video I put out yesterday about the symbols, and I was bullish on them. I didn't have any shorts out there yet. I've been talking very, very bearishly about the market. And, you know when it's time to get bearish. Right now, we're hitting all-time record highs. I already have a short hedge on the market. So I'm ready. I'm ready to go. If this market tanks tomorrow, good. Stops on my longs will get triggered and my shorts will do the work. So I'm not looking to add to shorts yet, but we'll get the signal. So for right now, if anything, I want to trade around my short position and have long exposure. So the yield curve, we closed out the week last week, and I'm using a monthly chart for the purposes of this illustration. This line in red here, or excuse me, in blue, indicates where in the past we've seen a range of where the equity markets, as measured by the S&P 500 here in black, tends to buckle. So you can have an uninverted yield curve, and equities could still go up. It's just a matter of what's missing. What are we missing? And we're going to go to that in a moment, because there is a mechanism that will cause this market to roll over. I have a video to play. Make sure your audio is turned up. So the yield curve at current on the monthly chart is very, very uninverted now. A massive move in the past quarter. And buckle up, folks. History has shown us that this is an extremely bearish event. We've only had one quote-unquote soft landing, and that was around 1980. And everything else has been a cluster F by the Federal Reserve. I believe this is a video I was going to play. Yes, it is. Let's make sure my audio is up so you could hear it. I don't think that matters, really.
Question now is whether the most recent data is suggesting that we are finally entering a recession and that investors dumping stocks today are right to panic out of the market. Now, when we zoom out a little bit to take a look at the 4 previous economic downturns in the US, we see that all of them get triggered when non-farm payroll reports dip into negative territory. That means instead of the US economy adding jobs, it's actually seeing negative job growth. And when that happens, that's when you can actually see some pretty big damage in US stocks. So if you've been wondering why the US stock market is still making new all-time highs, despite all of this news that we're seeing from financial outlets regarding a recession, it's because this data is not recessionary. Now, of course, this chart could morph into something like this. In fact, we've explained why we think that's eventually going to happen. But from a trading and investing standpoint, it's still too early for us to act on this data for now. Investors who panicked out of the market in any of these slight dips in non-farm payrolls would have been left out of a massive bull market. Question now is whether the most...
Okay, so while I agree with this, we need to take into account a couple of things. One, we just had a revision of over 800,000 jobs that's being created that never were. We are coming into an election season where they're not going to let any bad news out that's going to allow this stock market to crash. So the job picture is probably a lot worse than what they're allowing us to be aware of. I was amazed, to be honest with you, that we had a report of over 800,000 jobs so soon before the election. So that just tells me that's probably a lot worse than what one would expect. So that, as well as this, companies will cut costs before they let go of employees. They will do anything because you make a big investment in an individual. You train them. They know your business. You know, if you have a business that's working for, with a manager that's doing really, really well, last thing you want to do if you're on the golf course is have to go back to work. You're not letting them go. That's your lifestyle. So what they will do is that they will not post new positions. And you are seeing job postings come in. You have the JOLT survey coming in. Jobless claims are a lagging indicator. So let's take a look at this chart here. And I have another one to go over as well. So when you're looking at this chart, S&P 500 dark blue and U.S. unemployment in light blue. The thing to remember here, the light blue chart is inverted. So when it's employment unemployment is actually rising, yet the stock market is moving up higher. You have a bearish divergence. And every time you've seen this in the past, these shaded areas here are recessions. And you get unemployment, which rises, and the equity markets roll over because you're going into recession. Simple as that. He's got it marked here. So where are we at current, according to Fred? This is the St. Louis Federal Reserve Bank. And you can see here that unemployment, I believe this is the U3 number. The unemployment rate is not just drifting up, it's spiking up now. And anytime in the past, when you've seen that, you've gone into these shaded areas and you're in recession, but they don't know you were in a recession until after the recession usually is over. So that's why right now I'm sticking with a short position on the triple Qs, because I think that at some point in time, especially after the election, we're going to get peppered with revisions that are going to be stunning. And we want to be ready for that. So right now we're trading around a short position with long trades. I don't know what that was just. I just closed it out. Americans have never been so worried about the year ahead. The share of consumers uncertain about business conditions over the next year spiked 51% in September, the most on record. This percentage has doubled in 4 months. Over the last 30 years, the share of consumers concerned about short-term business prospects has never been higher. That's an understatement. Look at this chart. We have absolutely blown through any type of resistance to the point where this is unsustainable. So I fully expect a lot of revisions coming out in the coming months. Now, I want to segue over and into, here's the soft landing I was talking about. They did it just once. Here in green. This is around 1980. A soft landing means when the Federal Reserve starts to cut rates again, yet you don't go into a recession. Simple as that. Let's talk about natural gas for a moment. I have 5 reasons that I am very bullish on natural gas. I'll go through them as we go through the data. AI, you have these data centers that they're building are going to be consuming a massive amount of energy. Yield curve relative to natural gas. I think I'm going nuts because I figured that one out. I mean, that's really nerdy stuff that I figured out. The technicals on the charts of the chart of natural gas looking beautiful. Natural gas versus gold. Can you believe that this month natural gas is outperforming gold, even though gold hit all-time record highs? And lastly, supply. So let's go to it. As this article states, AI could drive a natural gas boom as power companies face surging electricity demand. Natural gas producers are planning a significant spike in demand over the next decade as AI drives surge in electricity consumption. The electricity demand forecast is as much as 20% by 2030. So this is the wind at the back of natural gas from a fundamental perspective. Now, when you take a look at the environment that we're in, this is a different variation of the chart I showed you earlier of the yield curve. So you have your standard yield curve in candlestick chart. And then in purple, I overlaid natural gas. And of course, we have the S&P 500 in black. So what's happened in prior times where you had an uninversion of the yield curve? Well, S&P 500, which we talk about all the time, rolls over. What did natural gas do? A rip your face off rally. 2007, 2008, S&P 500 rolled over. uninverted yield curve. Natural gas, a rip your face off rally. Back here in 2020, more of a lag effect, more of a base that got built, yet it resulted in an uninverted yield curve. S&P 500 rolled over here. Eventually, because of all the liquidity that was pumped into the system, the S&P 500 rallied back with a V-shaped recovery. Yet, natural gas had a rip-your-face-off rally before going into the present-day bear market, which at current appears to be ending. Why do I say that? Simple. Monthly chart, this is not closed yet. The however is that we have a higher low, and at current, if we close where we're at or better, we have a new higher high. That will end the old bear market and possibly begin a new bull market in natural gas. So that is the correlation between it and the yield curve. So yield curve steepening, typically bullish for natural gas. Natural gas, the reason why I always like it and I always track it is because it's an island unto itself. It's got a correlation with the S&P 500 of about 33%. It's highly uncorrelated. So that's why we like it. What else do we like about natural gas? Weekly chart, natural gas. Here's your higher low. And we broke out last week. We have some resistance above. Take these off. This is the automated trend lines. Folks, we're using TrendSpider, 35% discount code below automated technical analysis. Let's throw them back on. So we do have resistance above, but last week's volume was very, very strong. I'm looking for a breakout and a retest of around 1652 on UNG. We went long of Boyle. This is a leveraged product using a call spread last week. We're up on it at current by a little bit. Let's go to the log scale here. There we go. That's better. So you can see that Boyle, I would track UNG. I would use the chart of UNG or the continuous contract of the futures rather than Boyle because it's a leveraged product. You have time decay in there. So I would use those charts when you're determining whether or not you have a breakout rather than using simply just Boyle. This is a derivative of UNG and, of course, the futures. Something else just fired off here. Silver moved lower. Okay. Not a big deal. No volume. So natural gas technicals are looking very, very bullish. Now, looking at the performance of natural gas using the ETF versus gold. So this is a ratio chart. Ratio chart UNG versus GLD. And you can see that UNG's outperformed gold by 9.5% on the month. Very, very good showing. 1 month does not make a trend. The however is that this is clearly waking up and money flows are moving into natural gas. What else do we like about natural gas? Supply. So for the longest time, you've had contango on natural gas. But the outlook for supply is becoming bullish. Natural gas news, market poised for a breakout as multiple bullish factors converge. They're talking about technicals here, but this is the most important. The EIA, they report nat gas inventories 10:30 a.m. Eastern Standard Time every Thursday. EIA reports lower than average storage build, fueling bullish sentiment. Boom. So we're seeing a perfect storm develop here where not only are the technicals and fundamentals in line, we also have a hedge relative to the yield curve moving up higher, and the equity markets rolling over. That's why we are bullish on natural gas. Let's do some chart requests. Let's take this off. Okay, let's talk about first chart up. I think this is for Donnie. TME. $0.10. Before I go over this, $0.10's a Chinese stock, I believe. I want to get a vibe for the Chinese stocks. FXI was up last week, higher lows. All right, so they're improving. I just want to get a vibe of the Chinese market. Let's go back to TME. All right, so it broke out last week. You have a descending wedge formation, and it got resolved. Am I bullish on it? I'm more bullish on the Chinese market than I am on Tencent right now. I need to see a retrace and a retest of, let's call it 950, 960. And if you want to put on a trade there, I'm fine with that. But I would not be a buyer, aggressive buyer of these shares until we get a weekly close above $11.03. Why? It's because I want to know that not only could we break out and above resistance, do a retest, I want to know that we have the follow through and the volume to close us above prior resistance at $11.03. Our train, welcome, welcome. Let's go to the daily chart. So as you can see here, again, automated trend lines, a lot of overhead supply here. No monthly resistance or support below. So I would stay small on any pullback. I'd be a buyer, small position, maybe 20% of your intended allotment. Scratch the itch and wait. That's what I would do. That's Tencent. Rio. All right, Rio Tinto. I haven't looked at this one in a while. Looking at a monthly chart. I think I drew this trend line. Yeah, I did. I drew the support level a long time ago. And this is my price target or support level that needed to get hit. And we did. We're holding it at current. So this is looking interesting to me. They tried to take it down. They reversed it up last week. So I'd be a buyer, but I'd use a stop loss on a close on a weekly time frame below 62 bucks a share. Give it a little bit of room. Here's the weekly chart. Nice breakout last week. I'm not going to be the least bit surprised given the topping tail here, wick, shadow, call it what you want, call it cupcakes. What it implies is that you have sellers above. There's a lot of overhead supply here, right? A lot of buyers that have been sitting with this stock. They just want their money back. Simple as that. So they're going to sell. So don't chase this stock. Allow it to come to you. I'd be a buyer right back down here again. I think it's going to do a retest of it yet again at around 63 bucks a share. Let's go daily view. I think it's pulling back. I'm not a buyer here yet. Thursday, big volume day to the downside. Not so much on Friday. We close at the lows of the day, though. I'd still wait on this. Allow it to retest one of these rising moving averages, the 8 period. That'll coincide around where you have support. So no rush here. Look for a bullish reversal day off of support or off of a moving average. Then I would begin accumulations, or as I like to call them, bull operations. Guys, I'm seeing comments get put in. If you need to go into the the forum area and post them there, please, right? Because I have way too many comments. I can't keep track of them all. So please post them in the forum. MBLY. Mobileye. There's not a lot of data on the monthly chart. Weekly chart's not looking good at all. The best that can be said is that we've stopped going down, but we're not at a support level. In fact, I would argue that we're flirting with resistance. I'm not a buyer here. I think this could easily break lower. I'm not a buyer here of these shares. Daily chart. For me to buy these shares, I need to see it close above 14 bucks a share. I'd rather pay more for the probability of being right rather than buying now and hoping that we break through all that resistance above. Weak stocks generally tend to get weaker, so I would wait on this one for lower lows. I'm not seeing a bull case here whatsoever. In fact, I would argue that they're selling into resistance. Next support level is down here. I hate to say it, hoping nobody's long here, at $5.71. Again, if it breaks out and closes above 14 bucks a share, then I'm interested. ORGN. Ooh, really nice. Big breakout last week. This is a buy at $1.76 per share. It's going up. Here's the monthly chart. This wants to go up. Daily view. Yeah, I would buy the breakout. Scratch that. I would buy the retest. I think you're going to get it. This is a big move last week. So again, $1.76 per share. If you can get it down there, I would buy it or add to positions. I would not short this stock. So bullish on ORGN. Annaly, this is a big yielder. I'm loving the setup here. So this pays a big dividend. And again, as I mentioned earlier with Verizon, Annaly pays nearly a 12.5% dividend. So we broke out last week, and what we have here is an inverted head and shoulders setup. Left shoulder, head, right shoulder. We broke the neckline. And this is a monthly chart. This is no joke. So the longer the consolidation, the greater the validation of any breakout. Annaly, I'm a buyer of it. I may be buying some myself. So remember that as these yields come in, value of real estate is going to go up because borrowing costs are going to come down. You're going to have cheap money chasing supply all over again. Same thing, inflation. But also, you're going to have institutional money and retail investors looking for yield. Is it any shock that after all these months of trading sideways, that the week that they cut by a half basis point, Annaly breaks out? There are no coincidences. This is going up. I'm a buyer. CEG. Wow. I think they're starting up 3 Mile Island again, aren't they? I think that was the news that came out last week. Beautiful setup here. Great pullback. The technicals look good. Looks like it wants to go up higher. This is a weekly chart. You have resistance right up here, 264. I think you need to get a pullback here. This is a massive move for utility. And this is on a news event, folks. So I would sit this one out. I would not chase this one. I would probably sell calls against this if you're long. I think it's going to pull back. Let's go intraday here. Yeah, it looks like it wants to go higher on an intraday basis, but you have all sorts of overhead supply above. You know, I'm going to take that back. On a 15-minute basis, you have a lot of overhead supply. But in reality, when you're taking a look at a view on a 90-minute view, you know, we closed at 254.95. We can trade up to 269. Still, would I initiate a new position here? No. Were I long and I enjoyed this rally up higher here, I'd be setting up trailing stop loss orders. So that's what I'd be doing. So great looking chart, but I think that's a good cause of a news item. Non-recurring news item. Ain't that? Weekly view. We're at resistance. This is Arista Networks. We're at resistance at 387.73. Again, the power of the automated trend lines. Folks, if you're not using TrendSpider, please, you should really get them. I give you the discount below, 35% off. Take advantage of it. I love the chart. I can't buy it until we close above 389 per share. We're extended. Good volume, though. I'm not saying that this is not going to continue up higher. When I go over these charts, I view it from the lens of would I initiate a new trade? So would I initiate a new trade here? No. The horse is left is stable. We're at the upper band of the rising uptrend channel. It could hug it, but I just would not initiate a new trade here. I would wait for a pullback. It's a nice support level, 376, 377, and then buy there. All right. Michael, I'm going to take your first one here. Moving forward, I'm going to ask you put them in the feed, okay? If you haven't joined up yet, I want to keep them all consolidated in the feed. Let me make sure I didn't miss anybody. Oh, Franklin, I got it refreshed. DBA. Monthly chart, a lot of overhead supply above. It's consolidating. You have on a weekly chart a Bollinger Band squeeze forming, but this could take weeks to resolve. So given the fact that what's a Bollinger Band squeeze in my definition? When you have the Bollinger Bands in red trading inside the Keltner channels. There's a lot of energy being built up here. I think it's going to fire off to the upside. The problem is it's a weekly chart. It could take a couple of more weeks of consolidation. Add to that on a monthly time frame. Let's overlay on a weekly chart, monthly resistance. Here's where the sellers are. So there's not a lot of room if I bought here to enjoy a profit. So what I would do, if these Bollinger Bands got really, really tight, like is there like right back here, like this tight, not this tight, this tight, I would initiate a long position, even though we have overhead supply. Because if my moving averages are stacked positive, if I have my primary trend bullish, which it is, then the probability of us breaking out and succeeding is pretty high. So that's my take on the DBA. All right. KHC. Weekly chart. It's hugging. I wouldn't buy this yet. It's got a lot of resistance above. I'm not a buyer here. It broke down below. In dash line, you have monthly support, now resistance. The month isn't over yet. We closed above it last month. In fact, the way you can look at this is this way. We broke out here in early September, the week of September the 2nd. Did a pullback and a retest. It held. But last week, we failed to hold it. But this is a monthly resistance level. So if we close down below, let's call it 35.14, by the end of the month, I would avoid this stock. If we close back above it, I would revisit it. But right now, I'm not a buyer. Oh, Kraft Heinz. Staples, I would avoid. Staples are not welcome right now. They're out of favor. They were in favor till we got the rate cut. Now that everybody wants high tech, they want discretionary names. I would sit back and wait on this one. I would avoid it. I would avoid it. It's not the money flows are not going into Staples right now. In fact, Staples broke down last week. And that's it, folks. Thanks for being here. You're welcome, Franklin. Thanks for being here. Everybody have an awesome, profitable trading week and a great evening. If I missed your symbols, please head on over to the forum. Get signed up. It's free and allows me to keep all of the symbols categorized, and I won't miss anybody. There's the link. Just sign up for it. There's no charge. You're not going to get asked for a credit card. All right, everybody. Have an awesome night. Take care. Be well.